Hello everyone and welcome back. My name is Greg Furman and these are the market positions for December the 20th, 2017. Now these will be the final daily trades for 2017. So what we're looking at here is very much a repeat of what we were doing yesterday with the British Pound New Zealand. Our first trade for tonight, of course, in the Forex market. So when we look at this particular pair, which is certainly forming a very interesting pattern here, we can see that we've got support forming here at the 174 level, and we have the same signal that had us long in last night's Forex weekly outlook, and that of course is that medium term crossing over the long term predicted difference. Now what that's telling us is, specifically what that's telling us is that we have the medium term trend weakening against the longer term trend. Now again, the British pound, a significant sell-off from the 180 area all the way, fell 600 pips in the last week and a half. That is far too big of a move, and a lot of that again is based around this nonsense that Brexit is a bad thing. So when we look closer at this particular trade, we're moving back up from oversold territory, still below the 40 level, still below the 50 level, but our neural index is turned higher, our strength indicator is turned higher, and we have what appears to be a double bottom forming off of this 170 level. And again, our trigger indicator that is telling us that that medium-term downtrend that's been very significant is starting to weaken. So we want to play that particular scenario. When we look at our individual crossovers, we look at our short-term crossover, and we can further assess that it's confirming that the shorter-term trend is starting to reverse against the longer-term trend. Now, we're not looking for necessarily a trend reversal per se. The Aussie dollar is still quite strong, but we would like to play it back towards that VantagePoint 18-day predicted moving average. So from here, guys, all we have to do is go into that all-important daily report. Now, for tomorrow, with that close of, we're going to look at that close 174.61. We're looking for a minor pullback to 174.09. We're then targeting all the way up to 176.24, a massive potential move. Now, that doesn't mean we're going to get the full 220 pip move here, guys, but this is a very choppy, volatile cross pair. So in my respectful opinion, we do need a bigger stop, but we don't want it huge. So I would have my stop probably just down below this most recent swing low around the approximately the 173 area. Because ultimately here, guys, if this is the bottom, we've got a double bottom and we're just going to start moving higher from here, our upside is pretty much wide open. Now, once again, this is not a trade for the faint of heart. It's a very, very choppy cross pair that's a big mover. And as you can see, a single move today that's being suggested by VantagePoint is upwards of 200 pips. And again, not that we're going to necessarily get that, but we have to be prepared for that. So we've got a good base formed here. Hopefully we've got a good signal from the medium term crossing over the long term, but it is clearly counter trend. So with that said, that's our first position for tonight. Now our second trade for tonight is going to be in the U.S. energy sector. What we're looking at here is the Nabors Industries-NBR stock. Now we've got a very visually strong support level here at 550. We've poked below that area a couple of times here in the last week or so, or in the last 3-4 trading sessions, but it's immediately recovered. And this is very much a classic bear trap, much like what I've talked about in the Forex weekly outlook this past week. And what I mean by that is that we have an identifiable bottom here. But essentially what's happening is the market believes that this is the break of this current range, but that's really not what actually, in most cases, that's not what usually happens. It's a trap and it turns around, it moves higher. So you can see how I've marked a support area here. There's our medium term crossing our long term predicted difference yet again, and you can see how I'm connecting that to this particular signal. We've got our RSI moving higher, which is a good sign here, and we've closed, you can see we've closed at 605, which is above that critical VantagePoint 18-day predicted moving average, coming in currently at $2.89 per share. So what we also want to make sure we're doing here is checking those individual crossovers. You can see that our short-term crossover is consistent with our neural index, our strength indicator, and again, our medium-term trend weakening against our longer-term trend. That is showing that there's a good counter trend position here. Now, we do have a significant top also here, currently sitting at about 675. Ultimately, that's our target, but for now, we've got confirmation that we're likely moving higher. Now, our medium-term crossover and our long-term crossover are not in agreement here, to be clear. So this trade still also carries risk, but that's consistent with this particular time of year. So from here, all we have to do is go into that all-important daily report to fine-tune our entry point. So with a close of 605, we're looking for a minor pullback to 576 tomorrow. We're then targeting 626. Now, if we're picking up 50, 60, 70 cents on a $5 stock here, guys, that is a fantastic return on a percentage basis, regardless of how many shares you're buying. So that's definitely something we want to keep into consideration. And all stops, again, in my respectful opinion, need to be below the $5 per share mark, even at $4.95, $4.90. Keep it out of the broker radar. When we look at it over the last 6 months, we can see that this stock has been all the way up at $8.50 per share. And the other thing I will point out here is that that area currently is where we would bring in our most recent trend line. So if we can break through this trend line area at 620 per share, that will open up the door to the initial move to 660, but then we could see a move potentially, a potential retracement back towards that 850 per share mark. So with that said, I want to take the time to wish everybody happy holidays, and I look forward to further presentations like this in 2008.